Hello friends, in today's video we will be seeing all the tax deductions which are there in the Income Tax Act under section 80 like 80C, 80D, 80E and many more other sections which can help you to save taxes. So if you are an individual or a salaried person, then this video is going to be very useful for you. Hello friends, my name is Karthik. I am a chartered accountant by profession and a YouTuber by passion. So friends, if you see, lot of people realize only during the end of the financial year, somewhere in the month of February or March, that they need to save taxes. But that is not the right approach. Actually, you should start planning for tax savings right at the beginning of the financial year itself, in the month of April, May, June, etc. Right? And hence, I thought of making this video in July so that right now you can plan well for the taxes which you can save in this year in advance itself. Okay, so tax deductions basically reduce your total income, and because your total income gets reduced, you pay less tax. So that is the advantage of tax deductions. And how this tax deductions actually work, I will explain you with the help of an example and also with numbers. Okay, but let me just finish explaining section 80C. After I finish 80C, I will explain you with the help of numbers and example how these tax deductions actually work. So let's start with section 80C. In 80C, there are a lot of transactions on which you can get tax deductions. We will all see them one by one. The first one is life insurance premium. So if you have taken a life insurance policy for yourself, your spouse or your children, then whatever the premium you pay on that life insurance policy, that premium amount is allowed as a tax deduction from your gross income. Okay, that is the first one. Second one is the tuition fees, and this is not the tuition fees which you pay for your small child's maths and science tuition, private tuition. No friends, this is not that. This is the tuition fees of your child's school tuition fees which send them to school or college or universities, right? So the tuition fees of school, college and universities are allowed as a tax deduction, but you need to keep certain things in mind, which is the school, college and university should only be in India. Okay, foreign school, college, universities, tuition fees is not allowed as a deduction. So tuition fees only in school, colleges, universities in India. Another point is that this deduction is allowed only for a maximum of 2 children. So if you have a third child, then the tuition fees paid for that third child is not allowed as a deduction under the Income Tax Act. Okay. And one more point is that it should be full-time education. It cannot be a part-time or a correspondence type of education on which you can get the deduction for tuition fees. And it is only tuition fees, friends. Okay, not anything else. Your school fees, if you see, they collect a lot of other fees also, like uniform fee, personality development fee, building development fund. All those things are not allowed. Only tuition fees is allowed. So the third one is repayment of housing loan principal portion. So if you have taken a housing loan, friends, for purchase of a house property, then whatever the amount you pay, repay the loan, in that the principal portion, whatever you repay in the EMI is allowed as a deduction under section 80C, only the principal portion of the housing loan. Okay, so apart from that, if you have whatever the stamp duty charges, registration fees which you have paid for registering the house or stamp duty fees, etc., those amounts are also allowed as deductions. And apart from that, any commission or brokerage if you have paid to the brokers for purchase of house, that amount is also allowed as a deduction under the section 80C. Okay, then the fourth point is contribution to PPF, Public Provident Fund. Okay, so Public Provident Fund is a fund set up by the central government for your long-term savings or for your retirement savings, right? So it is for long-term purposes. So whatever amounts you contribute to Public Provident Fund for yourself, your spouse and your children is allowed as a deduction under section 80C, deductions from your gross income. Then the fifth point is Employees Provident Fund. Okay, so this amount you would be knowing that whenever you get your monthly salary, monthly pay slip at the end of the month, in that there will be small deduction of Provident Fund, employees contribution of Provident Fund, which will be deducted some 2,000, 1,800 or 2,200 rupees depending upon the company. So that amount which the company deducts from yourself and pays to the Employees Provident Fund organization on your behalf, that amount whatever is getting paid is also allowed as a deduction under section 80C. So the sixth item is mutual funds, investments in mutual funds. And not all the mutual funds are allowed as tax deduction, friends. Only investments in ELSS mutual funds are only allowed, which is equity linked savings schemes mutual funds are allowed. If you invest in these mutual funds only are allowed as tax deductions under section 80C. So whenever you're going to buy a mutual fund, the name of the mutual fund itself will be written that this is ELSS mutual fund or tax saver mutual fund. So hence that time you will know whether this mutual fund will give you ATC benefit or not. Okay. Then the seventh point in ATC is fixed deposits in banks and post offices, which you can make and then get tax deduction to ATC, but it should be for a period of 5 years. Then only you will get deduction under ATC. Then the 8th point is, Sukanya Samriddhi scheme account, okay, which is, a scheme started by the central government for empowering the girl child. So if you open a Sukanya Samriddhi scheme account with a bank, and whatever deposits you make into that account is allowed as a deductions from your total income under section ATC. Okay, so these are the, these 8 transactions are the most commonly used or well-known famous transaction, friends. There are other transactions also, like for example, annuity plan of LIC, right, wherein every year you have to contribute to LIC, for a pension or retirement purposes. Then after 60 or 35 years, when you become 60, then you will get monthly pensions. So annuity plan of LIC, then National Savings Certificate of Post Offices, NABARD bonds, right, the National Housing Bank scheme. These schemes are also there on which you can get ATC, but I'm not going into those because those are not, very famous. Okay, the 8 schemes which I've told are the ones which are most famous, and hence I thought of telling those schemes alone. So the maximum amount of deduction which you can get under ATC is 1,50,000 rupees. Okay, that is 1,50,000 or actual amount whatever you have contributed, whichever is less. For example, you have taken life insurance policy, you have paid tuition fees, mutual funds, PPF, all those things, and your total contributions come to 2 lakh rupees. Then you will get only 1,50,000 only and not 2 lakh, because 1,50,000 is the maximum ceiling limit. But assuming all this PPF, tuition fees, LIC, you have contributed only 1 lakh rupees, then in that case you will get only 1 lakh rupees as a deduction. So maximum deduction is 1,50,000, right? That is what it is. Then apart from this, there is another section under 80 only, okay, which is National Pension Scheme. Okay, so whatever contributions you make to National Pension Scheme in any year, you can get a maximum deduction here for 50,000 rupees over and above this 1,50,000. Okay, so totally under section ATC you can get 2 lakh rupees as tax deductions. Now let me tell you, friends, with the help of an example and with numbers, how these tax deductions help you in saving taxes. Okay, so let us assume you get a salary. Okay, you get a salary of say 12 lakhs per annum, right? And apart from that, you have some fixed deposits on which you can get interest, and you get dividends on the shares of the companies in which you have invested, and these two things come to say 1 lakh. So what is your gross income? Your gross income is 12 lakhs salary plus 1 lakh on these interest and dividends. Total it is 13 lakhs per annum is your gross income. Okay, gross income. Now out of this 13 lakhs, suppose you have contributed and invested some amount in ATC, various sections which I have told you, various points in ATC, and you have contributed 1,50,000 rupees, right? And apart from ATC, other sections also like ATD, ATE, which I will be telling in the later part of this video, in that additional 50,000 you have contributed. So what is the total deductions under this section 80? 1,50,000 plus 50, 2 lakh rupees. So your gross income is 13 lakhs, deductions is 2 lakhs, so 13 minus 2, 11 lakhs will be your taxable income, right? And on 11 lakhs, you need to pay the taxes as per your slab rates. Okay, but if you don't have these deductions for 2 lakh rupees, you will have to pay taxes on 13 lakh rupees, right? Hence, these deductions reduce your taxable income. Okay, so now let's go to the next section, which is ATD, which talks about health or medical insurance, right? So if you have taken a health insurance policy for yourself, your spouse, and your dependent children, then the premium paid on this health insurance is allowed as a deduction under section ATD. Okay, so here the term is dependent children, which means your children should be dependent on you for your livelihood, which means they should not be working or they should not be earning by themselves. So they are in school, colleges, something like that. Okay, So whatever, you pay premium for health insurance for, this family, maximum of 25,000 rupees is only allowed as a deduction, or actual amount, whichever is less. Okay. So 25,000 is allowed as a deduction, health insurance. And if you have taken a health insurance policy for your parents, right, then you can get another 25,000 amount as a deduction under section 80D. And if your parents are suppose say senior citizens, 60 years or more, right, then the deduction available to them is 50,000 rupees. Okay, so basically under 80D you can get 25,000 for your family and 55,000 maximum of 50,000, totally 75,000 as a deduction under section 80D. One more important thing, which actually good thing, which the Income Tax Act has done, is that, friends, suppose your parents are very elderly aged, say 75 or 80, 85 years plus, then in that case it is very difficult to find a health insurance policy for them, because most of the insurers will not insure them because of the risk involved, right? So in that cases, what you can do is, what the Income Tax Act allows is that if you incur any medical expenditure for them, like medicines, doctors, hospital visits, all the medical expenses can also be availed as a deductions under section 80D, even if they don't have a health insurance policy, right? So that medical expenses is allowed, but again the limit is maximum of 50,000. Okay, so that is the amount of deduction which you can get in 80D. The next section is 80E, interest on loan for higher education. So if you have taken a loan for higher education, right, then the interest portion on that loan is allowed as a deduction under section 80E from your gross income. Okay, so higher education means studies done after 12th standard. Okay, and higher education even done abroad is also allowed as a deduction. Even if you do a higher education foreign country, that is also, that loan on that, interest on that loan is also allowed as a deduction under section 80E, and it is allowed for yourself, your spouse and your children also. But only one condition is that the maximum period for which you can get this deduction is only 8 years. So if your loan finishes within 8 years, well and good. But if it goes beyond 8 years, you will not get for more than 8 years. So with that, we come to the end of the part 1, friends, part 1 video. And I don't want to make this video a very longer video, because then it will be difficult for you to understand the other sections of the Income Tax Act as well, and hence I thought of making this into a 2-part video. Okay, so in the second part there are another 5 to 6 more sections which are there in the Income Tax Act, which can help you to save taxes. And so look out for so do watch the second part also, so that you can know all the sections which are there for tax deduction purposes. Okay, so see you all in the next video. Until then, this is C.S. Karthik signing off. Thank you and namaste.